All right, good morning, agents. This is Kevin Lauren. I'm the Director of Training and Marketing here. And today, Bill Seitz, our corporate broker, is going to be joining us, and he's going to be going over what to do with overpriced listings. So this should be a really good discussion in today's climate. So we're going to have a great discussion today, and we hope that you guys, have a little participation. So if you have a mic, when we get into that, you can raise your hand and we can bring a couple people on and we can kind of brainstorm this stuff. So should be a fun, interactive webinar today. But before we get into today's presentation, we are going to bring on Bill Seitz, our corporate broker. Good morning, Bill.
Good morning, Kevin. How are we doing today?
Doing great. Fantastic day.
It's thunder and lightning right now down here in Newport Beach, which is very strange for this time of year.
Yeah, that's cool.
So yeah, it's a little bit out of nowhere, but we'll take it.
Totally. Take any rain we can get in this state. Good. And then, of course, we also have Cameron Alley from Clearview Mortgage joining us. Good morning, Cameron. How are you doing, buddy?
Good morning, Kevin. I'm good. How are you?
Fantastic.
Wonderful, wonderful.
Yeah. So What's going on out there in mortgage land, Cameron?
All right. Could you please let me screen share?
I think I already did. Maybe not.
It says host disabled.
God, I'm not good at that, are I?
It's okay.
All right. You ready to go, buddy?
All right. Perfect. Okay. So, all right. So I got a quick little update today. I wanted to talk a little bit about underwriting and kind of what to expect with obviously new requirements, things getting a little tougher in the underwriting world. But first, of course, we'll go over the 10-year Treasury. We're still sitting right below that 4% threshold that I talked about the last couple weeks. As you can see, today yield day high was at 3.978. Pretty much every day we've been going close up to that 4%, and then it starts coming down. So that happened yesterday. Today that happened. Now we're down about a basis point. We were up almost 2 basis points this morning. So pretty significant wall there, and let's hope that that continues to happen. And then I thought this was kind of interesting. This is kind of what I talked about last week. This is Mortgage News Daily. They're one of the most basically reputable outlets as far as mortgage news. And they're saying pretty much the same thing that we've been saying. Mortgage rates escape harsher fate as bonds fight to hold ground. And that's one of those things that we always want to keep in mind, is that it doesn't really matter what the Fed's doing. Bonds are what's really going to control rates. So we can sit and we can pretend that we know exactly what's going to happen, but we really don't. And so far we have escaped, bonds getting out of hand. So that is definitely good news. And then, as always, I just wanted to go over the stock market real quick. The Dow Jones, on Monday, we did hit a 2-year low, and we're having a little bit of a rally today. But as I said, watch this mark, because if it gets down to, let's say, the 26,000 mark, I do think that rates will come down projected even sooner than what they expect. So keep your eye on that. And then real quick, wanted to go over the underwriting requirements with retail banks. Mortgage credit availability down to a near 9-year low in September. And basically what mortgage credit availability translates into information to us is that basically these lenders are going to have stricter requirements, because the less credit that's available, the more strict that the lenders are going to be. So as rates have increased, underwriting requirements have gotten more challenging. The demand for non-QM mortgage products, like bank statement loans or maybe DSCR loans or different scenarios like that, have risen dramatically. Whopping 60% since last year, QM mortgages have raised in demand. So basically what that kind of says is these borrowers are taking higher rates for less conditions. And this is something that was popular before the last housing recession. And it's not really that people necessarily want higher rates, but it's that, these people who maybe are investors or people who feel like rates are going to go down and they just want to hurry up and get the house, they're taking more non-QM loans rather than regular loans, which is being driven directly from the retail sector, like people who maybe go to Wells Fargo or Chase or something and they get denied. Well, then they go to a non-QM lender and they get a loan that they really shouldn't get. They maybe could qualify if they talk to someone else. So really, really crazy 60% increase in non-QM loans. As a side note, mortgage delinquencies at the moment are still near record lows, while new foreclosures rose by about, I think it was like 15% from July to August. but they're still 44% below pandemic levels, pre-pandemic levels. Analysts expect for the pandemic levels maybe by the middle of next year if job numbers do not hold up, but job numbers have been holding up as we discussed last week. And what that means to us is that prices are going to continue to lower and possibly much more availability as potential listings and home sales do come up next year if analysts are right and there are more foreclosures than are expected right now. For the sake of everybody, I hope that there aren't, but as we know, this housing market is all about it's a system, it's a cycle. So, we do expect to see more of that because of how high rates are right now. As far as an update on underwriting requirements nationwide, basically that credit availability hit the lowest that it did since March 2013. So that's really saying with your retail lenders like Chase, Wells Fargo, Quicken Loans, Loan Depot is one of the big ones, that their underwriter requirements are getting much more strict. And especially with jumbo loans, credit availability for those jumbo loans has fallen by 50% since last year, which will obviously in that sector will 100% cause significant price drops, since many lenders are basically making it hard to just get them done. Something important to note is that lenders make their money primarily on the secondary market. What that means is by, packaging up these loans and selling them to other investors. So closing loans that these banks think are risky or will not, they don't think that they'll be able to sell them on the secondary market. So it's not in their best interest to close them. Right. And that's obviously where this article came from. High-end real estate hit hardest by price declines, which we know is going to happen. That's usually what happens during, whenever house prices do come down, but just something to keep in mind. But mortgage loan denials at retail banks have gone up by 67% since last year. 67% since last year just for retails. And they estimate that 40% of that had nothing to do with income ratios, rates, or DTI. So 40% of that wasn't, buyers saying, hey, man, these rates are too high. And 40% of it was not, oh, they don't qualify. Most of it was not meeting new requirements on non-salary income, which is called variable income, or not meeting new credit score requirements. So basically a lot of the retail banks increase their credit score requirements, and people who are not on salary, right? Like you have a position where maybe you get paid hourly, or you're a nurse where you work a lot of overtime. That variable income really affects your eligibility. And long story short, these banks would rather take the loan, not take the loans and wait for rates to go down and cash in at that point. However, mortgage brokers, due to lenders like UWM and Home Point, et cetera, are easing variable income requirements and actually making it easier for people to qualify in order to take up market share from retail banks. So just something to keep in mind. And I really wanted to go over that today because our goal obviously is, if you have buyers that are maybe talking to, a retail bank and they get denied, we don't want them to go and get a non-QM loan, right? Because there might be a way for them to still get a better rate and not have to take a worse mortgage. And that's why it's important to, make sure that they're communicating with a mortgage broker or somebody like us that can look at it and give it a second opinion and make sure that we'll get them into the best mortgage we possibly can, because what that's going to do is make sure that they don't default and that they have a decent mortgage payment. Because a lot of these non-QM products are up in the 9, 10, 11% range, and people think that that's their only choice. So it's not their only choice. It's just that a lot of these banks are getting very, very strict with their underwriting requirements, as we can see from that data. 67% denial increase over the last year from retail banks. So just keep in mind, we want to protect our clients and make sure that we're doing the best we can to keep them out of a non-QM product if it's possible. So, but that's pretty much what I have for today as far as a mortgage update, and I'll let Bill take the floor.
All right, perfect. Thanks, Cameron. That is always, I really appreciate you bringing this information to us because it really sharpens the agent's knowledge. So I just always astounded on the great knowledge that you bring to this group.
Thanks, Kevin. Appreciate it. I try to do my best every Wednesday. Keep it interesting and fresh.
Keep it rolling, buddy. You're doing great.
Thanks, man.
Well, and to that point, Kevin, it just now more than ever, and we'll touch on this in the next little segment, but now more than ever, you have to have somebody that's a go-to, that knows this stuff backwards and forwards, that knows every possible angle on being able to get a loan pushed to the finish line. If you don't, you're really doing your client and your borrowers just a disservice. And we're seeing more and more, transactions fall out because of financing. So if you don't have all this identified and all this front end work done before you get into contract, you really are at a disadvantage, and the likelihood of something happening is great.
For sure. And then also, before we get into our presentation here, Bill, we just want to remind everybody that Legacy Escrow is up and running, and Raquel Bauer, our escrow officer extraordinaire, is doing a phenomenal job. And so please reach out to her if you guys have any escrows opening. Best way to get a hold of her is just phone number 949-200-9305, or reach out to her just by going to Raquel or emailing her at raquel@legacyescrowservices.com. Service.com. All right, Bill, take it away.
Very good. Well, I'm starting to get more phone calls about transactions and things that are happening along the way. And, I'm seeing more listings sit on the market longer, as we're all probably experiencing. Some areas more than others, which is normal. Obviously, real estate is local. So you still may have pockets of, highly, areas that are very desirable that are not maybe seeing so much. But as a general rule, it is starting to trickle down from the top, and people are not being able to afford as much price point. So we know the incomes haven't matched what the prices are, or they still are. And so, a lot of this, I was kind of going through my notes. I was kind of like, okay, we've been through these cycles before. There's certain things that come into play. And I was talking to Kevin. I said it might be good to have a little interactive webinar on what are some things you can do in this marketplace. Whether, obviously the goal is to not take an overpriced listing. That's obviously the goal. You want to educate your sellers as much as humanly possible, and you want to provide them with real statistics, tangible data, and you want to prevent this from happening. But as we all know, sometimes there is some unrealistic expectation from the seller. Sometimes they want to start at a certain price point. Sometimes you have to work backwards. And, it's never fun. It's not the ideal situation, but it does happen. We've all experienced it. And I think, Kevin, you went over some statistics about pricing your home correctly. I think that was a few weeks ago, right? That was maybe 4 or 5 weeks ago.
Yep, that's right.
And, one of the big points of that, training was, pricing your home below the competition. And there's only so many buyers in your pool, right? So whether you're, in Modesto or Sacramento, or it doesn't matter. There's only so many qualified buyers who have the capacity to purchase the home in your price point with the other homes that are on the market in that price point, right? So there's only so many buyers. If you decide to price the home at the top, right, because you have a seller that's maybe thinking their homes, and everyone takes their home personally, right? Everyone's attached to their home. They've put in the new yard. They've done the new upgrades. They've perhaps done a bunch of stuff over the years, which is great. But, they're dealing with emotional feelings in that, in that equation, where your job is to explain to them that, look, in order for us to sell this, we're going to have to be, ahead of the competition. And, when you look at this data, when you do your research, and now more than ever, you need to do proper research. You've got to know your CMA. You've got to call your title company, your title rep. You've got to get the property profile. Make sure you're not missing anything that's maybe not reflecting through the MLS. Maybe there's a off market sale, or maybe there's something that didn't get pushed through the normal channels of information. You need to really get your hands into that data and help your seller, educate your seller, understand where the market is. And it's, I think a lot of agents get stuck in the complacency of thinking that their home is just going to sell by putting it into the MLS and hoping the phone rings or hoping that you get that showing. It's really not happening like that anymore. And you got to do more work to get the sale. And, I think, the best way to help, if you have a listing that's already, let's say 3 or 4 weeks into being on the market and active, and you're getting no showings, maybe you're doing open house, maybe it's slow, maybe you have a feeling that the house is overpriced, but you need to have that conversation with your seller. You better have your ducks in a row, because if you just tell Mr. and Mr. Seller, Mr. and Mrs. Seller, I think it's overpriced by this and blah, 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 but you don't substantiate it with any concrete data. I'm talking, either color pictures through the MLS and the full profile, some title report, full profile. You've got them circled. You know exactly how many days on market. You can talk like that you're the expert and give them that to review, and you're going to have a better chance of getting them on your side and saying, hey, this is an issue for these reasons. And so that's one component, right? Is preparing your seller for this tough conversation. I recommend, if you do, are in this scenario, that you schedule a time that is going to be uninterrupted. You have the seller's full attention, either over the phone or in person, even better. And you do review this information with them, because this is where you're going to be able to showcase your knowledge and showcase what's happening in your local market. Let me go through here. This, Kevin, let me see here. So obviously, if we don't price the home correctly, that's what we're dealing with. We're dealing with a seller now trying to do a price reduction. We know in that last presentation that Kevin gave, the first 2 to 3 weeks is going to be the busiest, right? You're going to get the most traffic statistically through the first 20 days or so. So if we get through that time period and we're starting to approach a month plus on the market, we need to start doing an analysis of all these things that we're talking about. And so you need to really take a hard look at what's going on. Know your competition, right? You need to know literally every home. And if you can, go look at those homes. Go inside of those, compare apples to apples, apples to oranges. Where does your property lie? You've got to know this stuff. You got to know the stuff inside and out. There's no way you can convey a proper sale if you don't know what the competition is. Once again, there's only so many buyers for the homes that are on the market. And now, as Cameron mentioned, with financing becoming more challenging, it's even more important to do that.
Yeah, Bill, a year ago, you could get away with it. You could just kind of skimp on these things. You didn't have to grind. You're going to have to grind now. You're going to have to really have this information, right?
100%. And being a realtor a couple of years ago, if you were getting listings, that was, you had a money printing machine. All you got to do is plug it into the wall and you're printing commission checks. But, staying in this business at this time and getting through these tough periods, you've got to know how to do this stuff. You got to know how to do the hard work. You got to know what to do. And while we're talking through this, you've got multiple points here. If any of the seasoned agents have been through these cycles, or there's things that they find that has worked well for them, or they have any thing to add, please put it in the chat, because we want to make this an open forum for, suggestions and things that have worked for you guys, because I know we have a lot of great agents that have been through multiple cycles of markets. And so if you do have anything that we miss or that you want to add, please do not hesitate to put it in there, and Kevin can kind of read it out.
Yeah, for sure, guys. And then also, is the chat feature working okay for everybody?
I thought I saw somebody make it chat, Kev. That was you.
Yeah. So just making sure. One of our agents had mentioned that they couldn't find the chat anymore on our webinar. So I just want to make sure that everybody does have access to the chat. Everybody sees my good morning, agents, right?
I do see it.
Okay, good. So yeah, if there's any comments or anything like that from any of the agents, go ahead and put that in the chat, or you can even raise your hand and I can bring you on the line as well.
Okay, Tim is saying the chat is disabled.
Interesting. Okay, so I will have to do do something about that. But we do, of course, still have the, and Ann Harris says the same thing. So you can use the question and answer feature because that is still working. I apologize about that,
Cool.
guys. Must be a little Zoom change. And so I just probably have to enable it now.
So we talk about pricing it, you know, where does it fit among your competition? We talked about know your competition, know your local market data, you know, have other homes received offers, right? How many days were they on the market? How does it compare to your property? Number 3 is a big one for me. This one for me is, I see agents do this all the time, and especially in a market that's, you know, shifting to a declining market, not putting a proper commission in place for the buyer's agent. Okay. You know, deals are getting harder to come by. There's less buyers out there that qualify. You know, good quality buyers are a commodity that are not a high commodity. If you are representing a buyer and you have a well-qualified buyer, you want to be compensated fairly. And not only that, it's also maintaining the integrity of our industry. If you're the agent that's putting the listing in at like 1.75%, 2%, all you're doing is 2 things on this topic. You're undermining your own industry, okay? Because I know no one likes it when they get the 2%. Everyone wants to get 2.5%, and you know, in the good days it was 3%. But it's even more important in a down declining market. Everyone's incentivized by what? Money or a commission or a paycheck. That's how we get paid in this business. Why not take the listing? Why not explain to Mr. and Mrs. Seller, you know what, it's really important in this market to offer a top quality commission. It's going to bring more agents. They're going to have more motivation. They're going to do what they can to get their buyer into the property and make it work. Let's offer 3%. Okay. The last downturn, I would see 3.5%, 4% at times. Okay. And agents start doing this because they know that it is enticing. It does make people work harder. It does make them put their you know, their thinking caps on, who could I get into this property? Who might want this? Maybe they're going to make the extra phone call. Maybe they're going to reach out to the extra person. It does make a difference. So please, I encourage you not to be the 2% buyer's agent. It's just, you're going to have agents that are going to gloss over the listing anyways, because they don't want to be compensated at 2%. So, and as a bigger picture, as I said, it also protects our industry. So, you know, if you want to take it on the listing side and you want to do a discount listing, listen, you have the flexibility to do that within our commission program. You know, you guys take the lion's share home of the revenue anyways. So, but on the outside agent side, I really encourage you to offer a proper commission, 2.5%, 3% in this environment. If we're doing
Bill,
all,
and Bill, real quick, unless you're not done with that point.
No, go ahead.
We do have a question, or actually a comment from Albert. We can always count on Albert for participation, which is awesome. So Albert says, maybe let the seller order an appraisal to prove to them what the value is all about.
That's never a bad idea. If the, you know, if you have time and you're not like pressed to get the home on the market, and you have a couple weeks and the seller's willing to, you know, pay for that, that's not a bad idea. Nothing's better than having a third party tell them what their home's worth, right? Or at least it's a piece to the puzzle. And that's a good point, Albert. And I have done that in the past personally. You know, and nowadays I feel like the appraisals are at least a little more, you know, kind of before the last crash, you could kind of get appraisers that would just kind of like, oh, what do you think? You know, they kind of like would get your input, and kind of maybe if you needed a little extra on the on the number, they would kind of you know, play that. But nowadays it seems like they're pretty in line with what the banks are, you know, kind of what they need to see. And so I think that's a great point. Consider a bonus. So if we're doing all these things and, you know, it's not selling, well, you can offer a bonus instead of a price reduction. Or maybe you've done the price reduction, but you want to try the bonus. So at the end of the day, you're talking about netting similar things potentially, or maybe the bonus gets you from having to do a bigger price reduction. I have seen this many times in other down markets where agents would put a bonus in there if the property was successfully, had a successful close of escrow by X date or a certain timeline. So that's something to consider. Okay. Number 5, financing. We talked about this briefly when Cameron was wrapping it up. I had an agent of ours that I'm kind of helping unwind a deal right now, and they had taken a down payment assistance financed, buyer with a property that has a roof issue or a roof leak or some sort of leak. And right now, down payment assistance financing seems to be on, as far as, where they're covering all the costs of the loan, seems to be drying up. I started doing some research and started calling on behalf of our agent, trying to talk to the lender because we weren't getting any information. It was going quiet. And I finally got a hold of the gal, and she says, yeah, they've just suspended or stopped doing portions of the down payment assistance program. So now this buyer no longer has the capital or the resources to complete this transaction. So we accepted, not only do we accept an offer with a very weak buyer, but the property had an issue that would never pass an FHA appraisal anyways until it's completed or fixed. So getting yourself into those types of situations is a big problem, right? I mean, I can't think of a worse problem. So you really want to double check the financing. Call Cameron, ask him if it makes sense. If this financing makes sense, does it look like it's going to make it across the finish line? You really got to have somebody that's going to give you honesty and transparency in this department right now, because things are changing and rates are going up, and the requirements and the underwriting criteria is going up and getting a little more difficult. So have somebody that you trust that's in your corner to give you the straight information.
Hey, Bill, could I add to that real quick?
Absolutely.
One of the biggest things to look out for, guys, that I see this all the time is pre-quals, right? There's a big difference between a pre-qual and a pre-approval. And some lenders will even put pre-approval on a pre-qual where they haven't even seen the loan documents from your buyer or whoever you're trying to qualify. So be very wary with that. And when you look at maybe pre-quals that you're getting from your buyer, always if it's a Wells Fargo or a Chase or something, take it with a grain of salt, because basically what these are based on is phone interviews, right? They say, okay, how much do you make? Okay, what's this? What do you think your credit is? Because one of the hardest things to get somebody to say yes to give them a piece of paper is running their credit, right? So a lot of times there's scenarios where people get pre-quals without even running their credit, right? So one of the first things I would do with your buyer is say, hey, have you given them your income documents? Is this based on your actual income? And then another thing is that no one should be sending out a pre-approval at the max right now, with all the volatility in the bond market, because we're literally up 15, 20 basis points in a day, or down 15, 20 basis points in a day. And that shifts a rate by, almost 0.25%, which on a $900,000 mortgage, that's a $300 difference in one day, right? So, or maybe a $200 difference. So just be very careful with that and check it out and make sure that you're getting pre-approvals that are based on their income and they're not at the max, because if they are at the max, I guarantee you when you go to lock, they're not going to qualify, and you just did all this paperwork and all this work for nothing, for it to fall out of escrow. So just be careful and do your due diligence. That's basically it.
And then we have another question or comment from John Espinosa, one of our very seasoned agents in the Bay Area. And he says, personally, he wouldn't do an appraisal because it could set the wrong opinion and price. We all know how appraisals can go sometimes, right?
Yeah, that's touch and go. I can see that point.
Right.
But, just in my, opinion, like the appraisals in the last few years and it has gotten pretty steady from my perspective. If anything, it's going to be conservative. And here's the thing, you can never price a home too low. And that's the reality, because the market's going to, if you price a home, let's just say super aggressively, and you get 3, 4, 5 offers, well, those buyers know the house is priced good, that it's below market, right? You're naturally going to have those offers get bid up, and you're going to find out you're going to get the top person willing to pay the top dollar for that property. And value, the definition of value, if everyone wants to go look it up, is what someone's willing to pay for the thing. That's what the definition of any value is. Right. So that the market forces will work if you understand the dynamics of them, right? And that's just the reality. Value is only what someone's willing to pay for the property. So anyways, thank you, John. That's a good point.
And John has another point. He says, be open to contingent buyers, but be careful and educate your sellers about the pitfalls.
100%.
Yeah.
100%. So that's a touch and go one too. But, once again, if they look strong, they check all the boxes, you've done your homework on what they're selling or what they're trying to do, you've got a very adequate or above proficient agent that you're working with, and it looks strong, I think that's you take a hard look at those deals. Let's see here, seller concessions. We talked about this with Cameron as well last week. We talked about the 2-1 buy down program. Okay, having solutions, know what that program is. Cameron put out a very good flyer that you can have at your property, have at your showings, have at your open houses. Know what that program is. Know what it means to the seller. How does it help the buyer? Instead of doing a price reduction, you can help them get into a lower qualifying rate. You can do some of these things, or they can buy down the rate. It doesn't have to be the 2-1 buy down program. We discussed this in our Clearview meeting last week. They can use the concession to buy down the rate in a 30-year qualifying rate, right, Cameron? They can now qualify with, maybe they don't get as low as the 2-1 program, but they get the 30-year fixed rate bought down to a level where now everything jives. Super important. That's a very good, Cameron, I don't know if you want to touch on that, but that's a very important component here.
Yeah, and that we have that 2-1 program. We also have that 1-0 program. So that is it's a third of the cost to do a rate drop for the 1 year. I would say personally, if you're talking, to your seller, and I still think that this 2-1 program or the 1-0 program is going to be more attractive than the rate buy down. But you can, whatever really your seller is into, everyone's going to be different, but the fact of the matter is, just like Bill's touching on right now, is that in this market, we need something to attract people, right? And if you have a seller who you're pricing that house at, maybe a really attractive, beating your competition, and you're offering one of these programs, you're setting yourself apart so much from the other competition that you're gonna sell the house, and a lot of other agents are thinking the same exact things that maybe we are used to, that, hey, I just list the house and it gets sold, right? So using these programs is going to help you. And also too, if you just literally pull up the data like I do every week and show it to your sellers, they know that we're in a falling market, and the sooner that they sell their house, the better, and the more perks that they give to get that house sold, if they're aggressive and they really, really want to sell the house, is the better. They're going to end up making more money at the end of the day, and the buyer's going to be happy, and it's going to get you more referrals. So it's just having those, I would say, kind of uncomfortable conversations, but really, if you have the data and everything to back it up, it's really an easy sell, and it's going to help all parties. Just because your seller's giving up a little bit of money to make that program work, you're going to have a really happy buyer, and you're going to have a happy seller when it sells in 15 days rather than 45. So
yeah, for sure. And then Albert asks, is there a max that they could buy down the rate, and what's the cost?
It's
Yeah,
just based on,
so, oh, sorry.
good, Cameron, go ahead.
So the max that you can buy down a rate is 3 points, right? So if you're doing a Fannie Freddie product, it's 3 points is the most that you can buy it down. Otherwise, you fail the QM test. For investment properties, there's no QM test, so that's something to keep in mind. For investment properties, there's a little leeway on that. But as I said before, rates are definitely going to go down at some point. So that's why the 2110 buy down program for primaries is a little more attractive, because let's say your buyer, forks up 30 grand to buy down the rate on a 30-year mortgage, and then rates fall next year and the buyer just refinances it right away. It's kind of a waste of money. So if we can use one of these programs and help them not fork up so much money, but still help out the buyer, I think that's a better alternative. But to answer your question, 3 points usually.
Very good. Excellent stuff. Thank you, Cameron. There's the flyers that, maybe we can get this out to everybody, Kevin.
Yeah, for sure. Yeah, I'll put this link in, and this is a download, so you can just download it as well.
Yeah, this is something that you're going to review. It's got a lot of information on it, but it's also something it's got Cameron's information on. This is a very important program that you want to have available. You want to let your other agents know that maybe have other buyers. Really good to have a conversation with your seller if they'd be willing to participate in this. And you can tell them this could be in lieu of a price reduction. This, this can be an alternative, which is so important, is to have different solutions, right? Because they might think this is a better solution than just a price reduction. They might think, So that's really important. And then Kevin, I wanted to go on that last point, number 7. So if I'm going to take a listing, me personally, at this point in this market, I am going to make sure that I call and I identify all of the top agents, top performing, top producing agents in the specific area. I am going to call them. I'm going to introduce myself. I'm going to tell them that I have a listing coming on the market. Maybe I know a couple of houses that they just recently sold, or I know of a house that they have on the market currently. And I'll give them as much information as I feel that they need at the time. But what I'm going to do is I'm going to ask for their opinion on, or try to get information about, have they had any offers? What's going on with that property? And I'm also going to let them know, do they working with any buyers that maybe don't fit their listing, or if they don't have any listings, do they have any buyers for the area? And then I'm going to let them know about my listing. And if you've already listed the property, I think it's a good thing to be proactive and start making outbound calls. Once again, agents are, still under the, not all agents, but I'm not going to throw everyone under this blanket, but they're maybe waiting for the phone to ring just because they have it in the MLS. And once again, we're going to have to grind a little harder nowadays. We have to pick up the phone. We've got to find out who's out there, who's got deals. Maybe they haven't seen your property for whatever reason. Maybe it's slid under the radar. Maybe they're extra motivated by the commission structure that you've put in place. You let them know about the 2-1 down buy down program. You're offering solutions, you're getting information from them. I guarantee you, if you do this stuff, you're going to sell the property. But if we just put in the MLS, we wait for the phone to ring, and we're not proactive, that's when these listings get stale. That's where the seller gets frustrated. That's where everyone's goals at the end of this don't get achieved, and nobody likes to work on a listing and then have it expire. That's not the goal for anybody. And I really advise you to consider some of these points as you're taking listings or doing transactions, because I think that for those of us, myself included, that have been in multiple downturns, these are the things that separate yourself from the agent that hasn't been through these downturns, that doesn't know some of the your tools to get things done. And please be mindful of it.
Yeah, absolutely. And then Ken Nodelman says, I personally use reverse prospecting and contact realtors whose clients are looking for properties like mine.
That's
call.
great. Absolutely. Absolutely. Ken's a very seasoned agent. I know he's been through, a couple of these cycles as well. And so he knows what works for him. And I guarantee you he's picking up the phone and getting, and being, a proactive agent and not a reactive agent.
Well said.
That's really all I have for this topic, Kevin. I think it's a broad topic. It's got a lot of components to it, but if we just keep it broken down into the simplest, these points, it's a good kind of cheat sheet or roadmap to being successful.
Yeah, for sure. So really good discussion today, guys. Important stuff. So, get out there, make it a great week. We really appreciate you guys coming on these webinars. I think it's a really important thing to do at least once a week. And so with that said, Bill, thank you so much for coming on the webinar today. Appreciate you.
Absolutely.
And I have a quick question here. Elena says, Kevin, any update on the app? Yes, so close, probably another week. So we'll be getting the app out to everybody. So that's really cool. So without further ado, we are going to end the meeting. I hope everybody gets out there, makes it a great week and a productive week. And we will see all of you on the webinar next week. Have a good one. Bye-bye.